Have you ever gotten a big raise, felt like you finally made it, but a few months later, you're somehow just as broke as before? You're not alone. This is a classic sign of a silent financial killer called lifestyle inflation, and it's the reason why earning more money often isn't the solution to your money problems. So, what exactly is lifestyle inflation? Simply put, it's when your spending increases at the same rate as your income. You get a promotion, and suddenly that small apartment feels cramped. You get a bonus, and that perfectly good car suddenly seems old. You start eating out more, upgrading your gadgets, and subscribing to every new service. Before you know it, all that extra income is gone, and you're right back where you started, living paycheck to paycheck, just with more expensive stuff. It's an automatic upgrade of your habits without any conscious thought, leaving you with the same old financial stress, just at a higher income bracket. This cycle is incredibly dangerous for your financial health. Think about it. If your expenses always rise to meet your income, when do you ever get ahead? Your savings account never grows. That down payment for a house, your retirement fund, or your dream of starting a business, they all get pushed further and further into the future. You become completely dependent on your next paycheck to sustain your newly inflated lifestyle. One unexpected job loss or medical emergency could send your entire financial world crashing down because you have no buffer. You're essentially running on a treadmill, working harder and harder just to stay in the same place. Let's look at some common examples. We've all seen them, and maybe we've even done them. You get a raise, and the first thing you do is move to a bigger, more expensive apartment in a trendier neighborhood. Your old phone works fine, but the new model just came out, and you convince yourself you need it for the better camera. That reliable car you've had for years. Suddenly, a brand new luxury car with a hefty monthly payment seems like a necessity. You start eating at fancy restaurants several times a week instead of cooking at home. You sign up for meal kits, streaming services, and subscription boxes that promise convenience but slowly drain your bank account. Each decision seems small on its own, but together they create a mountain of new expenses that consumes your extra income. A huge driver of this is social pressure. We're constantly bombarded with images of success on social media. Friends are posting photos of their lavish vacations, new cars, and designer clothes. It's natural to feel a sense of comparison and the pressure to keep up. We start believing the narrative that we deserve it. After all, you work hard, so why shouldn't you treat yourself? While there's nothing wrong with rewarding yourself, this mindset can become a justification for reckless spending. We want to show our friends and family that we're doing well, and often that means buying things we can't truly afford to project an image of success. We end up financing a lifestyle for others' approval instead of building real wealth for ourselves. And this is precisely how lifestyle inflation destroys long-term wealth. When every extra dollar you earn goes toward funding a more expensive lifestyle, there's nothing left over for the things that actually build wealth. You can't build an emergency fund, which leaves you completely vulnerable to life's surprises. You have no money to invest, meaning you're missing out on the power of compound interest, the single most powerful tool for growing wealth over time. You're essentially trading your future financial freedom for a slightly more comfortable present. This forces you to work longer and harder, well into your 60s or 70s, just to maintain a lifestyle that never brought you true security in the first place. You're stuck in the rat race, not by necessity, but by choice. So, how can you tell if you're caught in this trap? The signs are usually quite clear. The biggest red flag is when your income goes up, but your savings rate stays exactly the same or even goes down. You're making more money than ever, but you still feel anxious about your finances. You might find yourself thinking, if I could just get one more raise, then I'll finally be okay. You're constantly depending on future income to feel secure, rather than building security with the income you have now. If you look at your budget and see that your wants have slowly transformed into needs, you're likely a victim of lifestyle inflation. The good news is you can break free. The key is to be intentional with your money. The most powerful strategy is to save your raises before you ever have a chance to spend them. The next time you get a raise or a bonus, immediately automate a transfer of that extra amount into your savings or investment account. Don't even let it hit your main checking account. This way, You learn to live on your previous income while your wealth grows in the background. It's also crucial to set clear and inspiring financial goals. When you have a powerful why, like retiring early, traveling the world, or achieving financial independence, it becomes much easier to say no to the short-term temptation of a new gadget or a fancier dinner. The ultimate goal is to consistently live below your means, creating a gap between what you earn and what you spend. That gap is where financial freedom is born. Instead of letting your lifestyle inflate unconsciously, you need to design your life with intention. Sit down and think about what truly brings you joy and fulfillment. Is it having the latest iPhone, or is it the peace of mind that comes from having a 6-month emergency fund? Is it driving a luxury car, or is it the freedom to quit a job you hate? Prioritize financial freedom over the appearance of wealth. Spend extravagantly on the things that genuinely matter to you, and cut back mercilessly on the things that don't. Maybe you love to travel, so you allocate a generous budget for that, but you drive an older car and cook most of your meals at home. It's about conscious trade-offs, not deprivation. Ultimately, remember this. More money will not fix bad financial habits. If you can't manage $1,000, you won't be able to manage $10,000. The problem isn't your income, it's your spending. True financial control comes from mastering your expenses, not just chasing a higher salary. Financial freedom doesn't start when you reach a certain income level. It starts the moment you decide to live with discipline and intention. Take control of your money, break free from the cycle of lifestyle inflation, and start building a life of true, lasting wealth. You've got this. So you finally got that raise you worked so hard for. Congratulations. But wait, why do you still feel just as broke as before? You're earning more money, but your bank account balance looks exactly the same at the end of the month. This is a classic sign of lifestyle inflation, and it's the silent killer of your financial dreams. It's that sneaky habit where the more you earn, the more you spend. Your income goes up, and without even thinking, your expenses rise right along with it. So, what exactly is lifestyle inflation? It's the phenomenon where as your income increases, your spending increases proportionally. You get a raise, and suddenly that slightly more expensive apartment seems necessary. That newer car model becomes a must-have. You start dining out more, buying brand-name clothes, and upgrading your gadgets. It happens almost automatically. Before you know it, you're earning 50% more than you were a few years ago. But you're still living paycheck to paycheck, feeling the same financial stress you always did. The problem isn't your income. It's your spending habits that have inflated to match it. Now, why is this so dangerous for your financial health? First, your savings never grow. If every extra dollar you earn is immediately spent, you're not building any wealth. Your savings rate stays at zero or close to it. This means your long-term financial goals, like buying a house, retiring early, or achieving financial independence, get pushed further and further into the future. You become completely dependent on your next paycheck just to maintain this new, more expensive lifestyle. You're essentially running on a financial treadmill, working harder and harder just to stay in the same place. Let's look at some common examples we're all guilty of. You get a promotion, and the first thing you do is move from a decent apartment to a fancier one in a better neighborhood. Your reliable old car suddenly feels outdated, so you finance a brand new one with higher monthly payments and insurance. You used to cook at home most nights, but now you're eating out 4 or 5 times a week and ordering takeout whenever you feel tired. Small things add up too, like upgrading from regular coffee to expensive lattes every morning, or signing up for multiple streaming services and subscription boxes you barely use. Each decision seems small on its own, but together they create a massive drain on your finances. A huge driver behind this is social pressure. We live in an age of constant comparison, especially with social media. You scroll through your feed and see friends on lavish vacations, driving luxury cars, and living in beautiful homes. It's easy to feel like you're falling behind. This creates a keeping up with the Joneses mentality, where you feel pressured to spend money to project an image of success. There's also the "you deserve it" mindset. After a tough week at work, it's easy to justify a big purchase as a reward. While treating yourself is fine occasionally, when it becomes a regular habit funded by your raise, it sabotages your future for a moment of temporary satisfaction. So how does this constant upgrading destroy your long-term wealth? It's simple. It leaves no room for what actually builds wealth. When all your extra income goes toward a more expensive lifestyle, you're not building an emergency fund. This means a single unexpected event, like a medical bill or a job loss, could send you spiraling into debt. More importantly, you're not investing. The power of compound interest is the single greatest tool for wealth creation, but it requires capital. If you're not consistently putting money into investments, you're missing out on decades of potential growth. You end up trapped, working longer and harder not to get ahead, but just to sustain the lifestyle you've built. You're essentially choosing to look rich now instead of actually being wealthy later. How can you tell if you're caught in this trap? Here are a few warning signs. First, your income has gone up significantly over the past few years, but your savings rate has stayed the same or even decreased. Second, you feel just as anxious about money as you did when you were earning less. A bigger salary should bring peace of mind, not just bigger bills. Third, you find yourself thinking, I'll finally be able to save once I get my next raise. If you're constantly relying on a future income boost to fix your current financial problems, you're stuck in the lifestyle inflation cycle. It's a clear signal that your spending is out of control. The good news is you can break free. The key is to be intentional with your money. The most powerful strategy is to save your raises before you even have a chance to spend them. The moment you find out you're getting a raise, log into your payroll system and automatically increase your retirement contributions or set up an automatic transfer to your savings or investment account. This is called paying yourself first, and it ensures that your wealth grows with your income. Another crucial step is to set clear financial goals. When you have a compelling reason to save, like a down payment for a house or a dream of early retirement, it's much easier to say no to impulse buys. And finally, you have to embrace the concept of living below your means. It doesn't mean being cheap, it means being deliberate about where your money goes. Ultimately, breaking the cycle is about building a lifestyle you can actually afford, not one that's designed to impress others. It requires you to sit down and intentionally design your life. What do you truly value? Is it freedom, experiences, or security? Or is it brand names and appearances? Prioritize spending on what genuinely brings you joy and fulfillment, and cut back ruthlessly on everything else. Spend on what truly matters to you, not on what society tells you should matter. Maybe you love to travel, so you allocate a larger portion of your budget to that while continuing to drive an older car and live in a modest apartment. It's your money, and you get to decide how to use it to build a life you love. It's so easy to fall into this trap without even realizing it. We think, I've worked hard, I deserve a little treat. And you do. But those little treats can quickly add up. Think about it. A few more dinners out each month, that premium streaming subscription you have to have, the slightly better brand of coffee. Individually, they seem small. But together, they create a new, higher baseline for your monthly spending. This is exactly what lifestyle inflation looks like in action. You start eating out more frequently instead of cooking at home. That daily $5 latte becomes a non-negotiable part of your routine. You upgrade your phone to the latest model the second it comes out, even though your old one works perfectly fine. You might move from a perfectly good apartment to a slightly bigger one in a trendier neighborhood just because you can now afford the higher rent. Or maybe you decide it's time to finance a new car because your old one feels, well, old. These are classic examples. It's also the shift from generic brands to name brands at the grocery store, or booking a fancy hotel for a weekend getaway instead of a more budget-friendly option. Each decision seems logical in the moment. After all, you have more money. But what's really happening is you're automatically upgrading your entire standard of living, leaving no room for your savings to grow alongside your income. And a huge driver behind this is social pressure. We live in an age of constant comparison. You hop on social media and see your friends on exotic vacations, showing off their new cars, or dining at fancy restaurants. A little voice in your head whispers, "Why not me? I work just as hard." This creates a powerful desire to keep up, to project an image of success that matches or exceeds what you see from your peers. It's the modern day keeping up with the Joneses, but now the Joneses are everyone in your social feed. Then there's the pervasive "you deserve it" mindset. Marketers are brilliant at tapping into this. They frame luxury goods and expensive experiences not as splurges, but as well-earned rewards for your hard work. This makes it feel almost irresponsible not to spend the extra money. It's a powerful psychological trick that justifies impulsive spending and makes lifestyle inflation feel like self-care. This external and internal pressure creates a perfect storm, pushing you to spend more to fit in, to feel successful, and to validate your hard work, often at the expense of your long-term financial health. So, how does this slow, creeping habit actually destroy your long-term wealth? It's a silent assassin for your financial future. First and foremost, it prevents you from building a solid emergency fund, when every extra dollar you earn is immediately allocated to a new expense. There's nothing left to set aside for unexpected events like a medical bill, a car repair, or a sudden job loss. You're living on a razor's edge, where one small crisis could send you spiraling into debt, regardless of how high your income is. Secondly, and perhaps most critically, it starves your investments. Wealth isn't built from your salary, it's built from your investments. The money you put to work in the stock market, in real estate, or in your retirement accounts is what grows and compounds over time, eventually creating true financial freedom. When lifestyle inflation consumes your surplus cash, you have little to nothing left to invest. You miss out on years, or even decades, of potential compound growth, which is the most powerful force in wealth creation. The result? You end up having to work much longer than you otherwise would, not to get ahead, but simply to maintain the expensive lifestyle you've built. You become a slave to your salary, forever chasing the next paycheck to support your spending habits, with true financial independence always just out of reach.